Hey guys, I just wanted to address something that I came across today and kind of provide a contextualized response and hopefully clarify anything that you guys witnessed or heard and um, maybe provide some insight into the discussion. So earlier today, I came across this YouTube video here. It's titled "Bitcoin breaches $6,000." All-time high and false Wyckoff gurus. Live chat and more. So about two-thirds of the way through, a little bit more than halfway through, these two guys, Matthew Beasley and Todd Butterfield, who are part of the Wyckoff Institute. Specifically, Todd Butterfield is the president of the Wyckoff Institute. And with the Wyckoff Institute, for those who don't know, it's the original stock market institute that Richard Wyckoff founded, way back when. And, it's been handed off to different people through different phases. And currently, Todd Butterfield is the president, and Matthew Beasley has some association with him as well. Okay, so before I address anything they said, I'll just go ahead and replay this video, and I'll provide some responses to the things they said.
Let me see. I'll let you talk about it, Todd. You talk about it.
You know, I was so busy, I didn't even. Can
Tell
you
them what's
that
wrong
up?
with this chart right here, Todd.
I didn't even pay attention
Here,
to it.
I'll go ahead and do it.
No,
Let
I'll
me do
do
it.
it. I mean, first of all, if anyone's looking at Wyckoff,
Hold on, let me preface this real quick. So basically today a gentleman came out, Bitcoin Magazine published a tweet saying they had a Wyckoff analyst. Basically they said Bitcoin price analysis, potential Wyckoff distribution may spring new all-time highs. So first we got to focus on this title here, okay? The title says potential Wyckoff distribution may spring new all-time highs.
hold up.
Hold up. Go ahead and
I
tell
don't know
me.
what that means.
What's that mean, Todd?
And I don't want to hate on nobody because I'm here to try to teach, and I'm not.
Okay, well, I'll
I'm
do it because
somewhat
I'm
an
not,
expert.
I'm not here to
I
teach.
guess I'm not really an expert. I don't consider myself an expert, but
Even though you're the
my
leading.
problem is I don't want our students looking at this and being like, "Oh, I've been all wrong. This is the way it's supposed to be," because I can't have anybody studying charts looking like this.
So here's the issue. Distribution is the top of the price cycle before a markdown phase. All right? So there's no way you have Wyckoff distribution and then it will spring into new all-time highs. All right? That's where we're going to start with our issue here. So that's what the title is. Now the thing is, we have 600 students that are trying to learn the Wyckoff trading method right now, and they'll read this and they'll look at this chart that we're about to look at that this Bitcoin magazine put out, and you know, and you'll get confused because this chart it's got issues, and we're going to go over these issues because somebody tweeted us, and yes, this is cool that they put out an article about Wyckoff, but they're not implementing Wyckoff the correct way. So we just want to explain this and go over it, and hopefully that way students that read this, they're not led to be confused. All right, so that's all. Now he did say potential Wyckoff distribution phase, but he has a lot of errors right here. So we're just going to go over this chart. Todd's going to label where the issues are.
It's just confusing.
It's confusing, and it doesn't really make much sense. But go ahead, Todd. There you go.
I mean, the first problem, because we could argue about this all day long, and the gentleman that wrote this could come on and argue, and that'd be fine too. The sign of weakness, and I can't. Can you put your mouse on that, or is it just a chart? You can't mouse that, right?
Right here.
Yeah, the sign of weakness, there's no sign of weakness until it's confirmed by a last point of supply. So it's hard to call that a sign of weakness when there's been no confirmed last point of supply. And when there can't be a last point of supply on that chart, and definitely not today when we're at 6,000. So you can't call that a sign of weakness. I mean, looking back, you could have called it a spring, I guess. But that's tough to call that there. And then he's got a second test of an upthrust, but you have an upthrust when it goes above previous resistance and then falls back into average level of closes. So to have an upthrust, let's say today, we've touched 6,100 we'd have to come back into the average level of closes, like let's say 5,600. That would be looking like an upthrust. And then you would test that upthrust by going back to 5,900, let's say, on lower volume than what the decline brought in. So I don't know what a second test of an upthrust is on that. And then the preliminary supply is way over there at 4,800. And anybody that's taken the course knows that to call preliminary supply way back there, I mean, that would have been stepping stone accumulation for higher prices. Preliminary supply would not be that low compared to a buying climax at 5,800. And again, charts are never clean like we'd show you on the course or etc. But if anything, preliminary supply would have been maybe at 5,400. You see a little bit of consolidation there, Matt. Go on that chart right there. I mean, you could maybe call that preliminary supply. And then the buying climax would be the next high left of where he's got it labeled. That run up into there would have been a buying climax possibly. And then you're building a sideways phase of accumulation or distribution. And that's still really to be determined. I mean, if we upthrust this area, all this would be distribution. So,
yeah, it wouldn't be a buying climax or an automatic reaction. That wouldn't even apply here.
I mean, it just doesn't look quite right. I mean, we could have had a buying climax automatic reaction, but now we need an upthrust, which is ending action, and then a testing it. But again, I don't know what he's labeling a second test upthrust. And all I got to say, I don't know who Bitcoin Schmitcoin is. I mean, I looked at him because he's the one that wrote the article a couple of weeks ago when we was at 3,600 saying that we'd had a sign of weakness and was doing a last point of supply, which again, volume back then I did not agree with. And again, I'm not hating on him because I've been thinking Bitcoin was going to slow up here myself, but I was friendly at the bottom, and now, I mean, again, I just want to make sure everyone's getting the right instruction because, and this guy, you know, he's being put out in the papers that I guess he's a Wyckoff expert, but I looked at him, and maybe I'm wrong, but when he wrote the article a few weeks ago, I had never seen him tag anything Wyckoff. So, you know, I'd say if you're going to learn Wyckoff, I mean, there's names I know that have done Wyckoff pretty well over the years. So I didn't give you those names. And more importantly, I think, since we are the Institute of Wyckoff, go to wyckoffsmi.com and read all the free stuff that we got there, because there's enough stuff to keep you busy for weeks on end. And then if you want to learn more, obviously you take this course or you take the full course. So that's about all I got to say.
That's all I got to say. Peter Brandt.
All right. So now that I beat you over the head with that little bit of video, let's go ahead and break down what he actually said, because there were a lot of false statements in that video. So first of all, before we even get into the meat of their conversation, I'd like to address this little bit down here, the all-time high and false Wyckoff gurus. Okay. I have a really big problem with this title right here, because it's essentially with that one sweeping sentence, you're discrediting what I have to say without actually attacking what I said. If you pay close attention as I go back through this video, notice how at no point did they actually address what I had to say. Right? I repeat, at no point did they go through the text and what I said and address what I had to say. They pulled one chart out of context and extrapolated my point of view and decided to label me a Wyckoff guru, right? Okay, let's go back and look at it.
I'll let you talk about it, Todd. You talk about it.
You know, I was so busy, I didn't even.
Tell them what's wrong with this chart right here, Todd.
I didn't even pay attention to it.
I'll go ahead.
Okay. Listen to what Todd just said. He was so busy he didn't even ellipsis, right? He didn't even read my article. So they're pulling this one chart out of context, and they're saying He didn't read the article, but based on this one chart, I don't know what I'm talking about. Let's continue.
I'll do it. I mean, first of all, if anyone's looking at Wyckoff,
hold on, let me preface this real quick. So basically today a gentleman came out, Bitcoin Magazine published a tweet saying they had a Wyckoff analyst. Basically they said Bitcoin price analysis, potential Wyckoff distribution may spring new all-time highs. So first we got to focus on this title here, okay? The title says potential Wyckoff distribution may spring new all-time highs.
hold up.
Hold up. Go ahead and
I
tell
don't know
me.
what that means.
What's that mean?
Okay. So what they're talking about is, for those who aren't familiar, I'm going to pull this up real quick. So this is a paper that Jim Forte wrote back in 1994, where he basically just went through, and it's about, title's pretty self-explanatory, the anatomy of a trading range. And what he does is he goes through and he breaks down a couple of different schematics of accumulation and distribution in the market cycle. And for those who aren't familiar with what the market cycle is, it has this ebb and flow. When the price is low, there's an accumulation phase, there's a markup. Sometimes there's a reaccumulation phase. It goes up higher, it distributes, then it marks down, right? It kind of just sloshes around, right? It goes from oversold to overbought, and it goes like this, right? This is like sinusoidal sort of market activity, right? Specifically, what I'm referring to is something like this. Okay, this is an example of a distribution phase. Specifically in the distribution phase, I was looking at more like this, right? So what we see, let me pull out my pen here. So what we see in this distribution phase is, although the market goes up, and then it goes down, it kind of does this. It's not as clean cut as that, right? It's like, it's jagged, right? It has its peaks, it has its valleys, it has points of interest within these valleys and peaks. And what you see is that part of the distribution phase is, a very steep climax, and then it starts to break new all-time highs here, and depending on what kind of Wyckoff distribution schematic you're looking at, it can take different forms, right? So this isn't like a catch-all to say, if it doesn't fit this mold, it's not a Wyckoff distribution. And if we go back, so this is a schematic 2, if we go to schematic, this is schematic 3, and if we go to schematic 2, it's very, very minute differences, but the overall message is the same. It's that there's an overwhelming amount of supply and not a lot of demand. So the part that I was looking at in my chart was I was looking at this part of the price activity right here. Okay. And if you look on different resources, like I said, there are different schematics you can find. And here's one that I was referencing for the sake of simplicity for this article. I was referencing something like this. Okay. So when I was making my chart, we were somewhere around here in the distribution phase, right? So what I was saying was there's going to be a spring here that pushes a new all-time high before it continues the distribution phase. I was pretty specific about my wording in my article, which is clear that they didn't read it because they would know what I'm referring to. So when they say they don't know what they're talking about, that's not true. Part of the distribution phase is testing new all-time highs because that's like one of the key characteristics of the distribution phase is the upthrust that tests the new all-time highs to see how far the institutional investors' influence stretches into the market. Okay, so let's continue their video here.
Meantime,
I don't want to hate on nobody because I'm here to try to teach, and I'm not.
okay, well I'll do it because
I'm expert.
I'm not here to teach.
I guess I'm not really an expert. I don't consider myself an expert, but
even though you're the
my
leader.
problem is I don't want our students looking at this and being like, "Oh, I've been all wrong. This is the way it's supposed to be," because I can't have anybody studying charts looking like this.
So here's the issue. Distribution is the top of the price cycle before a markdown phase. All right? So there's no way you have Wyckoff distribution and then it will spring into new all-time highs.
Okay, so key point there is he said there's no way we can have distribution and spring new all-time highs. And that was the main point of contention that they're going to try to hammer home throughout the length of this little clip, right? They're going to say, there's no way during this distribution phase that we have new all-time highs, right? This potential distribution may spring new all-time highs, okay? And, just to touch base here again, at the point in the chart that I presented, we were right here. So we are pre-new all-time high here, okay?
All right, that's where we're going to start with our issue here. So that's what the title is. Now, the thing is, we have 600 students that are trying to learn the Wyckoff trading method right now, and they'll read this, and they'll look at this chart that we're about to look at that this Bitcoin magazine put out, and you'll get confused because this chart it's got issues, and we're going to go over these issues because somebody tweeted us, and yes, this is cool that they put out an article about Wyckoff, but they're not implementing Wyckoff the correct way. So we just want to explain this and go over it, and hopefully that way students that read this, they're not led to be confused. All right, so that's all. Now, he did say potential Wyckoff distribution phase, but he has a lot of errors right here. So we're just going to go over this chart. Todd's going to label where the issues are.
It's just confusing.
It's confusing, and it doesn't really make much sense, but go ahead.
Okay. With all due respect to Todd Butterfield here, it's only confusing because you didn't read the article. Okay. I outlined all these points, and I tried my best to summarize the points within the context of an opinion piece for an online magazine, right? Like, I'm not going to sit here and go through a university level lecture about the complexities about the Wyckoff distribution phase. A, because I'm not qualified to do that. And B, because it's not a nice read for the common reader parsing through Bitcoin magazine, right? They're not in it for the technicals. They just want the high level overview and then the end result, right? All right, let's continue.
There you go.
I mean, the first problem, because we could argue about this all day long, and the gentleman that wrote this could come on and argue, and that'd be fine too. The sign of weakness, and I can't. Can you put your mouse on that, or is it just a chart? You can't mouse that, right?
Right here.
Yeah, the sign of weakness. There's no sign of weakness until it's confirmed by a last point of supply. So it's hard to call that a sign of weakness when there's been no confirmed last point of supply. And when there can't be a last point of supply on that chart, and definitely not today when we're at 6,000. So you can't call that a sign of weakness. I mean, looking back, you could have called it a spring, I guess.
Okay, you already just said. Looking back, I think we could call it a spring. So once again, the title of my article was Potential Wyckoff Distribution May Spring New All-Time Highs. Okay, he said it himself. I guess looking back, I'm going to quote him, he said, I guess looking back, we could call that a spring. Okay, one more time. Potential Wyckoff Distribution May Spring New All-Time Highs. Let's continue the video.
But that's tough to call that there. And then he's got a second test of an upthrust, but you have an upthrust when it goes above previous resistance and then falls back into average level of closes.
So in other words, he says, an upthrust goes above previous resistance, i.e. an all-time high. The previous resistance was the previous all-time high, so an upthrust would push us above to make a new all-time high.
So to have an upthrust, let's say today, we've touched 6,100. We'd have to come back into the average level of closes, like let's say 5,600. That would be looking like an upthrust. And then you would test that upthrust by going back to 5,900, let's say, on lower volume than what the decline brought in. So I don't know what a second test of an upthrust is on that. And then the preliminary supply is way over there at 4,800. And anybody that's taken the course knows that To call preliminary supply way back there, I mean, that would have been stepping stone accumulation for higher prices.
Okay, so one of my main contentions with the way that they're framing this argument is they're claiming that none of my points on this chart can be true because we haven't hit the last point of supply yet. Okay, I'll grant them that. That's also why I embedded my argument with the caveat that it is a potential phase, a potential distribution phase. And these are some points that I noticed that are similar to the distribution phase that Wyckoff likes to outline. Okay, so going back to the paper that I mentioned earlier by Jim Forte. Okay, so one of the points he makes in this paper, and this is under the distribution section on page 50, he says, I'm just going to go ahead and read this to you guys. And it starts right here if you want to read along. Okay, accompanying our discussion of distribution are schematics 2 and 3, two variations of the Wyckoff model for distribution. While these models only represent two variations of the many possible variations in the patterns of a distribution trading range, they do provide us with important Wyckoff principles often evident in the area of distribution and the phases. And he says, and the phases the Stock Market Institute uses to guide our analysis through the trading range toward taking a speculative position. So the whole point of analyzing the market and trying to see a potential distribution is you can draw similarities to the Wyckoff principles and try to take a speculative position, right? You're not going to sit here and wait for it to play out. You're going to note all these milestones throughout what you believe to be a distribution phase, and then you trade accordingly, right? So at this time that I wrote this article, I noticed these phases, these points during the distribution phase, and I noted them because I can't write anything about the future because it hasn't happened yet. So I said this is what I think is going to happen, right? Let's go ahead and continue with the video, and then I'll summarize this.
Preliminary supply would not be that low compared to a buying climax at 5,800. And again, charts are never clean like we'd show you on the course or etc. But if anything, preliminary supply would have been maybe at 5,400. You see a little bit of consolidation there, Matt. Go on that chart right there. I mean, you could maybe call that preliminary supply. And then the buying climax would be the next high left of where he's got it labeled. That run up into there would have been a buying climax possibly. And then you're building a sideways phase of accumulation or distribution. And that's still really to be determined. I mean, if we upthrust this area, all this would be distribution. So,
yeah, it wouldn't be a buying climax or an automatic reaction. That wouldn't even apply here.
I mean, it just doesn't look quite right.
One of my biggest problems with the way they're formulating this argument is they're just saying this isn't right, but they don't say why. Okay? So this guy, Matthew Beasley, he says, there wouldn't be an automatic reaction or a buying climax there. That's not right, is what he said. Why? Why can't there be a buying climax there? Why can't there be an automatic reaction there? Why can't preliminary supply be there? Okay, let's go ahead and put this chart in the context of the market, because I know the way I labeled this chart and the way I portrayed it, it kind of seems like a flat market that accumulates and then it goes up, right? But anyone who's following Bitcoin knows that this is just a scaling issue. Like it's a perspective that makes it look like that. So if we go ahead and look at the actual Bitcoin market here, I'll pull this up. This is a chart that I've been keeping a close eye on. We see that during the preliminary supply phase, which is, this moved. Preliminary supply. We see that it's actually part of this nice market climb that situated the launching pad for this buying climax. Okay. So when we sit here and look at the market through this lens, it makes perfect sense that there's a preliminary supply phase here where it shows that like the market's having trouble climbing and it's starting to pull back, right? And then all of a sudden there's a large injection of buy volume here. And if you see the chart that they're breaking down from my Bitcoin Magazine article, at the time we were right here, right? We were right here. So we were pre-up thrust. None of this had happened yet. Okay, let's go ahead and continue this video.
I mean, we could have had a buying climax on back reaction, but now we need an up thrust, which is ending action, and then a testing it. But again, I don't know what he's labeling a second test up thrust. And all I got to say, I don't know who Bitcoin Schmitcoin is. I mean, I looked at him because he's the one that wrote the article a couple of weeks ago when we was at 3,600 saying that we'd had a sign of weakness and was doing a last point of supply, which again, volume back then I did not agree with. And again, I'm not hating on him because I've been thinking Bitcoin was going to slow up here myself, but I was friendly at the bottom, and
so if you notice here, Matthew Beasley is pulling up one of my videos that I posted a few days ago. I think it's actually the day that they made this video, the 20th of October. I discuss in greater detail my take on the Wyckoff distribution phases in the Bitcoin market cycle, because I felt like it needed to be accompanied with my article because I didn't feel like the article encompassed enough detail. So I released a video further going into detail with this. And you can see here, Matthew saying, I'm going to need to watch this, which, judging by the fact that they didn't even read my article, I'm going to go ahead and go on a limb and say you didn't bother to watch my video either.
now, I mean, again, I just want to make sure everyone's getting the right instruction because, and this guy, you know, he's being put out in the papers that I guess he's a Wyckoff expert, but I looked at him, and maybe I'm wrong, but when he wrote the article a few weeks ago, I had never seen him tag anything Wyckoff. So, you know, I'd say if you're going to learn Wyckoff, I mean, there's names I know that have done Wyckoff pretty well over the years.
And then the rest of the video is just, you know, a plug for their institute. So my biggest pet peeve with the way that they formulated this argument is they at no point went through my article, you know, and said, well, you know, he's got his chart, but, you know, he, you know, talks about the buying climax, the description of the automatic reaction low, the price targets I set. And, you know, at no point actually like broke down what I had to say. They just jumped to this conclusion based off this chart that they thought they understood, and you know, extrapolated from there, calling me a false guru, calling Bitcoin Magazine, you know, calling into question their credibility because they're saying they're calling in the so-called expert and he doesn't know what he's talking about, and then of course they summarize it with, you know, if you really want to learn how to learn the Wyckoff method, learn it from us, right? So at the end of the day, this is just an attack on me without actually attacking the meat of my discussion, and using it to leverage with their students a point of authority with them, right? So I want to go into detail regarding my personal calls with the Wyckoff distribution. Okay. So this is shortly after that article. I released this published trading view, this trading view idea, right? And in my article, if you go back and read it, it's plain as day. I say we're gonna land somewhere in between 6,200 and 6,300, right? So let's go ahead and play this out and let's see what happens here. Aha! What do we see here? We see an up thrust. We see an up thrust into a buying climax that peaks at 6,200. Guess I got lucky with that one. Let's go ahead and break this down even further. Okay, so over the past few days, I've been releasing regular updates about the what I've been tracking with the Wyckoff distribution, and this is one of the charts that I posted today. Okay, so this is the one I posted today. So we see here, this is a more detailed version of what I put out earlier. So we see here the preliminary supply. We're in phase A, which is right here. We see the buying climax, which is right here. And I'm kind of just calling this whole thing the buying climax because the price is just kind of arcing upward and then it ultimately dumps. So then we see the automatic reaction low, which is marked by this blue line. We see the sign of weakness, which points down. There's another blue line. And then when I wrote the article, we were actually right here. Okay, so literally within hours of me posting that article, we saw a massive upthrust to 6,200, almost to the dollar, before ultimately retracing. So if we go through the schematic of where I believe we are, we see that the schematic has us going to an upthrust in phase B, followed by a series of like feeble rallies that ultimately lead in a test of the automatic reaction low, which is where it is right here. Okay, so I put this out earlier today before I saw their video, and I said, this is where we are, and this schematic, we are here. Okay, so if we were to follow the schematic even further, we would expect to see highs going upward, right? Highs that, if we see this little shoulder, you really shouldn't take this literally, but just for the sake of argument, we see that we should be retesting these points of resistance and then ultimately pulling back, right? So let's go ahead and look at what the market is doing right now, and then I'll compare this with it again, okay? So we see, what do we see here, right? So we see the test of the automatic reaction low right here. It rejects it, and now we are seeing a rejection of this resistance level right here, which if we pull up the this guy, let's go ahead and make you small so we can see. If we pull him into context here, we see that we are now right here, right? So we're somewhere in here, right around here. Boom. Okay. So after I saw their video, honestly, I was, for those of you who know me, I'm very opinionated, but I'm willing to concede defeat if I'm not going to irrationally argue you. If you've got a better point than me, I'll concede I'm wrong, and we'll learn together. So I reached out to them and I said, hey, I saw what you had to say about me, and this is when it starts getting good, right? So I sent him a tweet. I said, hey buddy, talking to Crypto News Matt. And at this point, I'll admit I probably didn't word this as carefully as I should have, but I was honestly pretty pissed off at the way they portrayed me and how they made it a giant plug. They made a plug by calling into question my credibility and saying that I don't know what I'm talking about, and saying, if you really want to, don't learn from him, don't read Bitcoin magazine, come to us, right? So I reached out to him and I said, hey buddy, just stumbled upon your complete misrepresentation of my Wyckoff analysis. Gotta say, that's pretty unprofessional and irresponsible. I'm going to provide a response, and I really hope you redact your fallacious critique of my breakdown. And this is when it gets interesting. So, they respond with a few snarky remarks here. We say, we have thousands of students and they are aware of your mistakes. They sent us the article because even they were confused by your chart. Okay, so once again, they're formulating an argument without actually addressing anything I've actually said, right? So I responded, I called him out on it. I said, I would love to have a conversation with you about this live, since you refused to actually address my posted material. And he said, Todd reviewed your chart in stream. Well, I mean, he kind of reviewed my chart, but he didn't really. Like, he reviewed what he thought I was saying and then extrapolated from there. So I said, okay, review this. And I showed him this chart. And I said, this is where we are. Right here. I said, review this. He didn't respond. And I said, please critique, and genuinely, I said, please critique this so I may correct any of my misunderstandings and prevent me from further spreading misinformation. And then the other guy, what is his name? Todd Butterfield. He said, I'm more than happy to have a constructive conversation. And I said, I would honestly love to as well. I've been reading Wyckoff distribution material ever since John Bollinger began talking about it months ago. Would you prefer to do it via Twitter? And then John Bollinger posts. Says he sent a couple things, but he said that he was disturbed at the way this conversation was going, right? Like, they were claiming to have this authority over the Wyckoff method, and basically trying to out me as being a false guru. And it was pretty weird, honestly. Like, it was pretty weird to have that happen, where it was like a personal attack. And for guys who are so deeply ingrained in market analysis, you'd think that they want to like have their facts straight before they go and break down someone else's material. Like, that's what we do as analysts. We see the full view of it before forming an opinion. And that's not what they did here, right? They didn't do that. They didn't get the full view. And even in the face of evidence, like, I presented it to them. I said, here, like, this is what I'm saying. Like, I have a long catalog of things that I've been saying on this topic, and you're not addressing any of it. So rather than addressing anything that I had to say, you went on your stream and decided to just kind of like shit on my analysis, and it was very unprofessional. And from there, just kind of went downhill. So he says, considering he goes on this like tirade here. He says, considering I am the head here at the school founded by Richard Wyckoff, I think I'm in a position to critique your analysis. Okay. I said, so then critique my analysis and not the title of my article. I put a pretty detailed video. Critique that. And I said, I have no problem admitting when I'm wrong. Since you're in a position to critique my content, I would love to hear back from you. And he responds with this smart-ass text right here, tweet. He says, you can learn more at the wyckoffsmi.com if you want, but we are who we are. And, he posts a picture of this book. So, and then they started going back and forth to John Bollinger, and it started getting like very weird. It was very weird. The whole situation was very weird. So, long story short, guys, all I was trying to do was just present my take on what present my interpretation of the Wyckoff analysis, and it's supported by a lot of material out there. And the fact that they felt the need to shoot that down without even addressing me or citing any references that say, maybe I'm misunderstanding something, I gotta say that it's pretty disappointing. It's pretty disappointing, and it's it kind of pisses me off because it affects my business, and it calls into question my credibility, and it calls into question the credibility of Bitcoin Magazine, since they're the curator of this information, right? So all I ask is that that these guys over at the Wyckoff Institute, that they give me a fair shake, and they actually like look through my analysis, and they say, hey, like, here, and here, like, I see what you're saying, but you're misunderstanding this point. We can have a mature discussion about this, and hopefully they can at the very least clear my name of this this false Wyckoff guru title, because that's not professional. And considering the fact that we're in this trading community together, I think it's better that we have a more synergistic relationship with each other than a combative one.